Well, howdy there, folks. We got a buy one, get two free in this one here today. But before we get into that, welcome to the new set. This is the first video I've ever recorded in this space. The space used to just kind of be like a sitting room that honestly hardly ever even got used. So I thought I'd just turn this into another little like recording space essentially. So yeah, we'll test it out and hopefully make it better over time. But it's a new little recording space here, okay? Alrighty, guys. So first one we're going to react to here, Ron Barron speaking about Tesla stock extensively. He went on CNBC a few hours ago and he really went in about Tesla and kind of where he sees the stock going. He makes some pretty big arguments so that the stock has already bottomed and we're heading up from here. So I want to react to all that. Then we get into this little 3-minute clip here, him speaking about long-term investing. And then last up here, I thought this was a very important video to watch that came out a few hours ago. Jamie Dimon, CEO of JP Morgan Chase. I think he's probably the most important man in the world to listen to in regards to the economic markets. And he's speaking about he's skeptical of a soft landing. So we're going to hear why he is skeptical, okay? Hope you guys enjoyed today's video. As always, appreciate y'all joining me. Don't forget to smash. Don't forget to subscribe. Jamie, slow down. He wants to speak already. We're going Ron Barron first, okay? Like order of importance here. We got to speak. We got to hear about Ron Barron. Oh, by the way, 1000xstocks.com. We are getting close to 300 people on the wait list now at this point in time. So if you're looking to get on that wait list, go to 1000xstocks.com. Join the wait list there. This can help save you a crazy amount of time and make much better informed investment decisions out there, okay? 1000xstocks.com.
Sold a few years ago. When you sold that stake, you did it because you were worried about the portfolio being too heavily invested in one particular stock.
It's gone up 20 times, yes.
Yeah, and it's gone up 20 times. Do you hit that point again? Do you have to trim more just because you now have $3 billion? What'd you say, $4 billion? I've got $4 billion. Yeah. At $3 billion as of 3/31 today. It must be $4 billion?
It's around, I don't know, it's around $3.5–4 billion, something like that.
But the reason that you gave in the past wasn't that you didn't believe in it.
It was just too big of an investment.
It was just too big of an investment.
Yes.
So you hit that point again.
Yes. Well, at some point, maybe. But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. Can it be too big? Sure. So I'm always watching.
Just because you're managing other people's money.
But I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be, yes. But
so what do you think right now? The stock came out, the earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think it's going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he said.
Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then...
Ron Barron, in all due respect, as a fellow Tesla bull, I got to push back on you here. No. The stock is down because Tesla's numbers have obviously fallen apart over the last 2 years. That's why the stock is down. Okay, let's be very clear about that. We expect Tesla to always grow at a very rapid clip. When the revenues are going down, especially automotive revenues down substantially, earnings per share down 50+%, net income down 50+%. That's why the stock is down. Let's not fool ourselves and try to make it out to be something it's not. That's why, okay? If Tesla was still growing 50% or even 30% and growing net income, believe me, the stock would not be down like anywhere remotely close, even if people thought they had canceled cheaper cars. Like, no.
And there was a report in Reuters said he's canceling this new factory that's going to make robo-cars, he's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company that makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting.
$4 billion
I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Costs $5,000. So they get...
No, but then you have to have a battery that's more expensive.
Oh, no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated, that they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, "Show me the incentives, and I'll show you how people act." And that's the idea, that people, the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that's the reason stock's down. And now
So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so...
Wow, that's a big statement right there. Now's the bottom. So, do I agree that the stock has bottomed out here? Here's what I'll say, okay? I believe it has bottomed if we don't have any sort of substantial recession coming in the next year or two. Then 100% I believe we've bottomed and we're only going up from here. If we are in some sort of situation where we get into, let's say all of a sudden a big recession hit, we got a lot of job losses over the next year or something like that. The economy could get hit worse, the stock market could get hit much worse, right? In that sort of situation, maybe we go back down to the $100 level that we had last seen at the end of 2022, beginning of 2023, right? So I think that's what it really comes down to. Now, if the economy just gets a little better over the next year or two, 100%, I believe we bottomed this baby out. But that's the big question. What happens with the economy, right? Because we are at we're in a funny place with the economy where interest rates have been elevated dramatically. They've been elevated for quite some time. Fed lags eventually catch up, and does that eventually cause a big job-related recession, right? And we'll get into more of that, obviously, in the Jamie Dimon video.
What they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
yes.
And a lot of the value is relying on that. Mm-hmm. The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done. And there's been
I feel like this gentleman asks that question to literally every single person that comes on and talks Tesla.
Questions
Same
about
exact
that,
question.
using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $250,000.
Because of all of the sensors and all of
and they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was just in California. Last Sunday, I was in Vail, because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out. Humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours. And then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into a parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person. And so we're sitting in the car, and so where do you want to go? I said, I want to see Steve Jobs' house. And so, okay, so they punch in the address, cool. And we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways. It looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us. There's a stop sign, first car stops, goes, second car stops, goes, we pull up the stop sign, car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if it's being set up on this, but the pedestrian waves, and then the car starts.
Can you imagine that publicity story? Robotaxi just rams right through a person. Ron Barron's in the car. They're taking pictures. Look at Ron Barron hit somebody.
Again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't. His wife does. The house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. You're
going to buy that, aren't you, Ron?
That's a little
but
creepy,
it drove
Ron.
all by itself. Yeah, all drove
Take me to stalk somebody's house.
It drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like the Tesla charging.
If they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500 credit.
Well, what's your timing? But just give me the timing. That's the whole game.
Now.
Now?
It's now.
So, very, very intriguing. Let me finish out with those thoughts on Tesla, then we'll get to his thoughts on being a long-term investor, and then Jamie Dimon on the economy. So, when he says now, it's happening now in terms of like you experience a car and it's just unbelievable. I've tested it out several times now, and the technology is incredible, absolutely incredible. And we're almost there, but we're still not there. And so when he says now, it's like, it's all happening now, and this is very exciting, but we got to finish the project, right? Is the car as good of a human driver? I can't say it's as good. I think it's better than some drivers. I'll be honest with you guys. I think it's better, safer than some drivers. Can I say it's better than the majority of drivers? Not yet. Can I see it getting there in the next 6 to 12 months with the way the AI chips are working and how fast things are progressing now at this point in time? Yeah, I could actually see within 6 to 12 months it being better than the majority of drivers. The last step is getting better than all drivers, right? Then we're really, really talking at that point in time. So, all right, next one up here. Let's talk about Ron Barron, talking about long-term investing.
And look at what's happening with the markets right now, and maybe specifically Tesla, because Tesla has captured everyone's attention. You have been
we're still talking about
probably
Tesla?
the longest Tesla shareholder and one of the most outspoken
Tesla.
bulls out there on this. You are a huge believer in Elon Musk, and I think you just came back from a trip to visit both SpaceX and Tesla.
Yeah.
Before we get into that, let's just see where Tesla stock is trading at here today. It would be extremely bullish if Tesla could be green again today, because obviously it came off a big day yesterday. So if that stock holds gains, that would be very, very bullish here. So let's go to my stocks. All right, let's see where things are trading at here today. Yeah, wow, very green, nearly 4%. That's very bullish, very, very bullish. Also interesting, people picked up on the whole NVIDIA stuff I was talking about last night. Yeah, that's very, very bullish for Tesla. The fact that it was coming off a huge day yesterday, the meta weakness today, and yet it still kind of bucks the trend and having a great day. Very, very bullish for Tesla.
About the markets first, just briefly about that, is that we're long-term investors. We visit companies in which we invest. We study the businesses, look to opportunities, bet on people. But we're long-term when you see the performance of the stocks in which we've invested. So I started in the business in 1970, and I was living in my friend's basement. I was in debt. In 1982, we started Baron Capital, had 10 million under management with an M. Now in 1992, 100 million, now it's 43 billion. And we've made our clients 44 billion in profits since we started. And I'm hoping that we make it.
I just love how, it's like we started with 10 million. Like it's such a small number, and like most people are like 10 million just sounds crazy, right?
In the next 5 or 6, 7 years, and I think we'll make a double again 5 or 6 or 7 years after that. Of course, I am 80, so there are not that many people who are 80. I guess Buffett does. Munger did. It was also very interesting. I was listening to your interview with Charlie Munger, 34 days before he died. And you said, Charlie, do you have a bucket list? And he said, yes, I do, Becky. And he said, well, what is it? And he said, well, and he's 99 at the time. Well, I've always wanted to catch a 200-pound tuna, but I'm not quite as strong as I was 4 years ago. He's 99. So it is encouraging.
And it was actually less than 2 weeks before he passed. So
amazing.
It was a very,
right.
That he was up to the very end.
Right, so I'm long-term all the way in everything we're doing. And I asked you, to not introduce me as a Tesla bull, because that sounds like the only
we
thing
didn't know
about
that.
it one way.
I didn't know
I made
why
that
it said
up.
investor, yeah.
So I asked you to do, please make me an investor. I am incredibly bullish about the opportunities for Tesla, but I don't want people to think this is the only thing he does one way. And,
No, but it is your largest holding. To be
It's our
fair,
largest
Tesla
holding
is
right
your
now.
largest holding. SpaceX is your second largest holding.
Right.
You have a long list of investments, but these two, because you got in so early, are your two largest holdings.
Well, we
at
have
this point.
400 investments, and the top 30, which is that sheet, represent about 56, 57% of our assets. And by being a long-term investor, you can actually do quite well. And it's hard for most people to do better than the stock markets. I recommend people invest in index funds, passive investing. And if you did that, that's a good way to hedge against inflation. So inflation makes everything worth twice, it costs twice as much every 14 or 15 years, 4%, 5% a year. Sometimes it gets down a little bit, but it's 4 or 5% a year for my whole lifetime. And so the way you hedge against that is investing in good growth businesses and staying with them for the long term. So 98%, 97% of our assets beat the market, 96% top 20, and 45% are the top 1%. In fact, Barron Partners Fund, the #1 fund in the United States since 2003. And that's my promotion.
Yeah, I think a lot more people would do individual stock picking and build out like a diversified portfolio of 10, 15, 20, 25 of their favorite best stocks. But the problem is I think most people, they probably don't want to put in the work, one. Two, they don't even know where to start in terms of think about it. If you want to learn investing, you're going to have to go the route I went. For most people, right? Unless you come across me in the private group and you can watch all the course curriculums and things like that. Otherwise, you're going to have to go through kind of what I went through, which is trying to read a bunch of books. Those books, even a big book, is only going to give you a fraction of the information you need to know. I mean, a fraction. The Intelligent Investor, I love that book. Gives you a fraction of the information you actually need to know to be a successful investor. I don't care what book you tell me. I've read them all, and they all just cover a fraction of what you actually need to know. And so a lot of it you have to learn in the field, right? And so, if you come across my content, you join the private group, you get to obviously learn so much more. You get to learn from A to Z and get to bypass all that. But most people aren't going to know who I am or come across my content or the private group or any of those sorts of things, right? And then the other thing is you got to find ways to save time, right? Because there's a lot of companies to look into. You got to keep in track of them all. And it's a long process. And so that's why I've tried to make everything as efficient as possible for my life. Like my videos, I record them all, one go, boom, they're out, right? I created 1000xstocks.com so I can easily see all the metrics I want to see if I'm researching a stock or trying to look at one of my current stocks. Everything that I want to see all laid out there within seconds. It's not like I got to go to this website and this website and this website and this website, which just costs a lot of time, right? And then conference calls all on the app, be able to compare all these different stocks with metrics. It's just, everything just saves time. So I'm more informed and I have massive amounts of time. I think that's what it comes down to. Most people just, they don't have the time, or they don't want to, or they just don't know where to go, right? Like, how do I actually learn this stuff? I think that's what it comes down to. Why JP Morgan CEO Jamie Dimon is skeptical of an economic soft landing. But I think people could be tremendous long-term investors. I think most people are intelligent enough that if they actually were able to learn, like, what this stuff means, what's a forward PE, how to judge growth businesses versus not, learn how to diversify funds, I think most people can be very successful long-term investors. And if they had the stomach to get through the volatility, the roller coaster ride that the stock market is. But most people just, they're just not in the position to do that, right?
Takeaway from it was that you have a very clear sense of what's good for America, what's good for the economy, and what's good for JP Morgan. What is the biggest threat in your mind to that confident vision?
So every year when I write that letter, I try to think of what are the most important things. I would add to that the free Western world, because that's what worries me the most is that the Ukraine war, the terrorist activities in Israel, the thread that's drawing between Russia, Iran, North Korea, China, the difficulties of our relationship with China. That whole thing is challenging, we would call the free democratic Western world. And that to me is the most important thing, that we get all of that right.
Well, I want to come back to the geopolitical backdrop in a minute, but right now I want to focus specifically on the economy.
Right.
As the chief exec of America's biggest bank, you have an unrivaled insight into the financial health of the US consumer. What are people doing with their money right now?
So you have to look at a little bit in context. The consumer's in pretty good shape right now. Unemployment's under 4%, has been there for 2 years. Housing prices are up, stock prices are up, jobs are plentiful, wages are finally going up at the low end. The consumer's in pretty good shape. The one thing you got to be cautious about, a lot of it is driven by just fiscal spending. Mm-hmm. So even today, the deficit is 6% of GDP, almost $2 trillion. That's driving a lot of this growth, and that will have other consequences possibly down the road, called inflation, which may not go away like people expect. So when I look at the range of possible outcomes, you can have that soft landing. I'm a little more worried that it may not be so soft and inflation may not quite go away people expect. I'm not talking about just this year, I'm talking about 25 and 26. The rates may have to go up a little higher. I'm talking about the 10-year rate, the 5-year rate.
I think that's important. He's really looking at even 25 and 26, and he's obviously got concerns about inflation and potentially soft landing, those sorts of things. So it's not like it's just this year he's concerned about, right?
It can have consequences, so we'll see.
But right now, you describe a pretty rosy picture, and yet we know consumers aren't feeling it. Why this disconnect?
Yeah, well, you have to look at different consumers here. So the bottom 20% of America have not done particularly well over the last 20 years. Incomes barely went up. Remember, suicide, fentanyl, crime, inflation. There are a lot of negative effects. Some people can't get mortgages, can't buy the home. So yeah, there's part of society who's kind of struggling. Part of society who's not. And I think that's a different issue about how we deal with the policy, but you can see why that has people upset.
So just to go back to the soft landing.
I mean, to be fair, I think it's really more than the bottom 20. I think really the bottom 50 is struggling, especially with inflation right now. Obviously, with the Fed funds rate where it is right now and what you can get on savings accounts, if you're wealthy, you don't mind what you see because the price of milk doesn't affect you. What you pay for a gallon of gas, if you're wealthy, it doesn't even matter, right? It's literally just a rounding error. But what does matter? If you got $1 million sitting around and it's getting you 5%, right? And you're making $50,000 a year for just having $1 million sit around, right? So that's where it gets into who's actually doing pretty well in the current system versus not so well.
In the letter, you concede you were on the hawkish side, but then things played out in a more benign fashion. But it's a slightly begrudging concession. You yourself sound quite glum in the letter. Can you tell us a bit more about why that is?
So I'm not looking at a year. I'm not making a forecast. I'm trying to say, what are the range of possible outcomes? And last year and this year, I would put out the same issues. huge amount of fiscal deficit, huge amount of QE, a lot of things in the future inflationary, the green economy, the remilitarization of the world, obviously the deficits, which, basically aren't going to go away as far as the eye can see, and geopolitics. All that puts me on the side of caution that things may not go as well as people expect. The odds of a soft landing, the market kind of prices in 70%. I think it's half of that. As a business person, I try to be prepared for all of that. Just a little cautious. It looks a little bit more like the 70s to me. And I point out to a lot of people, things look pretty rosy in 1972. They were not rosy in 1973. So don't get lulled into a false sense of security because the today looks okay, that tomorrow's going to be okay. So just trying to separate the two.
Sticking with today then, is Bidenomics working?
Partially. When you spend that kind of money, you're going to have growth, and we needed some of it, like some of the industrial policy. I think the infrastructure thing is terrific. That was bipartisan. Other things will remain to be seen. So I think some of the American public looks at it like, what are they getting? Mm-hmm. So if you go to rural America or inner cities, I'm not sure they feel like they're being lifted up by this economy.
Do you think Jerome Powell's doing a good job as chairman?
What's crazy is last night I was driving, right? And if you don't know, I live in Vegas. And I was driving, and I was like, man, a lot of these roads need work. Like I hit a big pothole, and it's just rough roads and whatnot. And then I was just thinking, I was like,
our roads are probably so good compared to a lot of people's roads, right? In a lot of other cities out there. But even here, I'm like, man, we need to do some work on these roads, like, to make them smoother, because they're all over the dang flipping flapjack in place. But anyways.
Fed? I have tremendous respect for Jay. I think the Fed was probably late in raising rates. They caught up. They're probably right and watching right now. We don't know what's going to happen. They might as well wait. We also don't know the full effect of QE. I'm a little more on the cautious side of that. Most people have a general feeling that you can reduce the balance sheet by several $1 trillion and its effect will not be felt. I'm not so sure. We've never had it before.
Switching tack now to geopolitics. We've got wars going on in the Middle East.
Hold on. That was important. I want to listen to that again. That was important there.
I think the Fed was probably late in raising rates.
Yes.
They caught up. They're probably right and watching right now. We don't know what's going to happen. You might as well wait. We also don't know the full effect of QE. I'm a little more on the cautious side of that. Most people have a general feeling that you can reduce the balance sheet by several $1 trillion and its effect will not be felt. I'm not so sure. We've never had it before.
Switching tack now to...
I think he messed up there. He said QE. I think he meant QT, quantitative tightening. I think that's what he actually meant.
We've got wars going on in the Middle East.
That's why I want to listen to it twice. I'm like,
Europe
what?
That create
doesn't really
an
make
enormous
sense.
amount of economic uncertainty. If we focus first on the Middle East, do you think that the US position towards the Israel-Hamas war is the right one?
I think Israel has the right to defend itself. I think war is a terrible thing. I think people have to be honest about what war is, and when they look at the civilian deaths and all the things like that. So I don't know the specifics of the military, et cetera.
So China's complicated, obviously, because...
I just I respect Jamie Dimon's opinion on economics and some of these things, but I don't want to hear him speak about those sorts of subjects. I'm not looking for him for guidance for that.
And we have so much trade with China. The supply chains are integrated, but at the same time, we reported recently that China is aiding the Russian war effort, and there's now a proposal by the US to sanction Chinese banks. How should the US approach China?
I would tell America, take a deep breath. We have all the foodborne energy we need, the Atlantic and Pacific, no wars in North America, South America. China imports 11 million barrels of oil a day. They're a very complicated neighbor. Their own actions are causing all their neighbors to rearm. Their GDP per person is $15,000 versus our 80. So, we're in a very good position. We have to restructure trade around national security. They need oil and gas, so the LNG, I think, is very important strategically. So I would negotiate them around all of that. I'm glad they're doing it. As long as Ukraine is there and they're doing anything to aid and abet, I think it makes it very hard to have a great relationship with them. I'm glad the government has the authority to do certain things. If, in fact, some of these things are true, they should do some sanctions.
Right.
But they should expect some impact, by the way.
I want to turn now to domestic matters and the forthcoming election. We're in the very unusual position of knowing what a Trump presidency looks like. We know what a Biden presidency looks like. Who's the best candidate for the economy for 2024?
Okay, I'm not going to go into that kind of thing right now. And whoever is president, we will try to help. I would like them to put a lot of experts around them, not just academic, but practitioners in the real world, because I think it matters.
How about you as one of the experts?
Near-death experience.
For that, so.
Okay, you're not a politician, but you are a chief executive, and obviously there are a lot of pressures with the job. You had a near-death experience about 4 years ago with your aortic tear, and before that you'd had a big cancer scare. How did those experiences change you?
Cancer scare was cancer.
Yeah.
Yeah.
Absolutely.
So I've got some final questions here. They're short questions that require short answers.
Okay.
How many days should people be in the office?
5 is ideal.
Are America's downtowns dead?
No. I think some are going to have difficulty because of their own policies, but no.
If you're a young person and you want to work at JP Morgan, what should you study at college?
It almost doesn't matter, to tell you the truth, because you're looking for smart, ethical, decent people. I do think in business, you should learn the language of business, which is accounting, and learn a little bit of basic business. So I think it would help to do accounting, finance, markets, something like that.
On the rare occasion that you take a day off, what do you do?
So my daughters have said, Dad, you need some more hobbies. I love my family, so we have a lot of family dinners when I'm around. We hike together. We take vacations together. I love wine. I love music. I just started playing squash again, which I'm still worried about, but I'm going to do it.
What's your morning routine?
Okay, I wake up usually at 4:30 or 5. I read 5 papers, you'll be happy to hear, in a very specific form. So I flip through the Post. I read the front page of the Washington Post. Then I read the New York Times front section, beginning to end, all of it. I read their business section, which isn't so great. Then I read the Wall Street Journal, front section, exchange next, and then the FT. And the reason I do FT last is because all the other ones are very much skewed to the U.S. So I like reading. I'll do it for hours in the morning. But then I like to get a little exercise and go to the office. So.
And do you ever switch off your phone?
I am not a fanatic on the phone. I don't even have it here. I have it outside, but I think people should spend a little bit less time on that, a little more time thinking. But I'm not on any social media. Every year I test it. I go on for literally just a week to see what everyone else is doing. Reels and Instagram and Facebook and TikTok, and then I click out of it.
Never tempted?
No.
Good.
So,
Jamie Dimon, thank you.
by the way, that's a good sign that he doesn't have to have his phone always with him. You know why? You know why it's a good sign? Because that means you have good leadership in place, right? If you feel like you run a business, you're a CEO of a company, and you've got to always have your phone connected to you, always be ready to take a call, that means your business probably doesn't have good leadership in place and to make decisions, that they're always looking at you. What do we do? What's going to happen here? Really, if you got good leadership in place, you should be able to stay away from your phone, right? That's a really good sign. That means you got people in power who can make the decisions when things go wrong, and it doesn't just fall back on you, right? All right, guys, appreciate you joining me as always. Thanks so much for being here. Much love. Appreciate y'all. Thanks for being subscribed to the channel, and have a great day.